How's it going? It's Rocky. Happy Thursday. Right now it is October 5th, about 4 p.m. in the Pacific Coast, and I'm trying something out, a little different series on my live content. So if you're a new trader or a veteran trader that's going through a slump, which is what I'm going through right now, I just want to show you ways that I improve or get myself out of a slump. So I basically look at a chart and then I make some, I'll go through on my examples, but I'll make some mark on it and try to analyze it for trades that I would have taken for today. So what I have up on the screen is Thinkorswim, and what indicators I may have here doesn't really matter. What matters is what works for you, right? So right now what I'm showing is what works for me, which is a combination of stochastic RSI right here as an indicator with a MACD. And the difference is on the left screen here, I'm using a 5-minute time-based chart. And on the right screen here is a tick-based chart, which is 512 ticks. And what I'm showing for right now is the YM. YM is the Dow Jones Industrial Average for the futures market. But you can do this with stocks too, or Forex, or anything that you'd like. And basically, what we're going to do is we're going to first zoom in on the tick-based chart, just because I like the patterns. And one thing I wanted to point out, this yellow line right here that I'm showing, which I'm going to zoom in a little bit on that one so you can see the number. So this one is at essentially 33,326. So that was the close of the market from yesterday for futures market. And my main goal today is pretty much just go through what happened to the market today, pick the long runs where it would have been a nice trade. Of course, you can't hit the peaks or bottom, but what I want to illustrate is to basically find the pattern that would be your signal in entering a trade and exiting a trade, and see if it's a repeatable pattern throughout the day. And with the futures market being open almost 24 hours, I will try to show that it works during the EU market, the Asia market, and the US market. And this is my first time looking at it. Again, I'm in a bit of a slump, so this is also, it's a two-edged sword, because it's actually helping me to improve on my trading by doing this. So what we'll do first is the right side, which is the tick-based side. I am going to maximize that screen. And based on this, again, the yellow line was the close from yesterday. We're going to look at the trade that would have made us the most profit. And you can see in the beginning here, in this part right here, it's up and down. So it would have been rough to trade that. However, let's see what that delta is. So from the top, let me draw the lines that you can see. So let's look, for example, let's use a different color here. Let's look at this peak right here and the bottom right here. So support and resistance. And the numbers there for this one, let's see, roughly at 350. That's 33,350. So I'll just write that down for reference. And then on the bottom, let's just say roughly 223. Again, my support and resistance is not perfect, but this is just for illustration purposes. So if you look at this delta between 350 and 223, that would have been a total of 127 points, if I did that math right. So it's still pretty significant. So even though it was up and down, there's definitely a lot of opportunities between that range that you could make money. And with the YM, if you were to trade 2 YM, that would have been $1,270. But again, you can't hit the top or the peak. So I'll avoid this side for now. I'm just gonna focus on, what would have been the best trade for the day, right? And that best trade for the day, and this is, from 50-foot high looking at it, and I'm gonna circle it. Hopefully you're looking at the same trade as well. So the ideal trade, the best trade of the day would have been right here, right? I'm sure you can agree would be a long trade there. And of course I'm doing it from the bottom to the peak. However, you could have made different exits. Exit 1 could have been right here, and a possible exit 2 would have been right here as well. So 2 possible exits either way. If you would have entered right in this bottom, that would have been perfect. Now, again, like I said, the patterns, the indicators I'm using doesn't matter. You can use this for your own indicators, but this is how I make my analysis. So what I do is I'm going to zoom in on that area of interest for us, and I am going to draw a line on where I would have entered. So drawing a vertical line there. So that vertical line might be hard to see, but essentially what I drew a vertical line on is right here. This candle right there. Actually, let me erase that. Let me just do this like this. Okay, right there. So that's the candle I would have entered, and hopefully it'll translate on this vertical line that I drew here, but there's a reason for that. And then next I'm gonna draw another line of our 2 possible exits, and the first exit that we would have taken before some sort of drawdown. Now let's just say let's just say that this drawdown didn't affect you at all because you had a nice trailing stop or you had so much profit anyway. So let's just pick the second one as our next exit here. So on that exit, I am going to draw another vertical line. Okay. And on this vertical line, I'm going to change the color to orange. All right. And actually, since hopefully it's translating, but let me just make the line thicker so you can actually see it. There you go. I think that's a lot better. So, all right, there you go. So now you can see where I would have entered and where I would have exited. Potential exit number 1, and then the other one that, just because if I don't know, it's sometimes I go through a phase where I'm able to handle this, but another possible exit. Let's just say you survive again this other drawdown. I don't think any sane trader would have gone through another drawdown like this, but let's say you did and you exited on this next candle right there. So potential second exit, I'll again draw a vertical line on that trade. Oops, is that what we wanted? Let's see. Okay, and we will make this line thicker, and I'll also make it again orange, because just to be consistent with a lot of my content, when I enter, I put a blue line. Oops. And then when I exit, I put an orange line when I'm long. All right. Here, you're probably wondering, okay, what are these vertical lines that you're doing? What's the point of it? This is now where I will, well, let's go through on the, it's okay, no. I'm not going to do that. So I'm going to delete a lot of those lines right now, and now we're going to show you the usual screens that I use when I'm trading, which is I'm using both a time base and a tick base. And my main goal is, for example, on this blue line where I entered, I want to look at the time of when that entry was. So if you look at the time of entry on that candle, you can see right here it's at 10:10. So what I'm going to do is on the tick base side, I'm going to look for the 10:10 a.m. candle. All right, let's look for 10:10. So 10:10 would have been this candle right here. Okay. And I will make that a thick line again so you're able to see it. So 10:10. All right. And then on the tick base side, oops, pardon me. I'm gonna look again on our 2 exits. So on our 2 exit on the tick base side, I would have exited at the 11 o'clock candle and the 11:40 candle. So 11 o'clock, 11:40, and they're nice round numbers right now, but in reality with tick base, it's based on the number of ticks, right? So for example, this candle right here is 11:31, the next one is 11:32, 11:34. Hopefully you get the idea of how a tick base is different there. So again, what we care about is this candle at 11 o'clock and the candle at 11:40. So we'll go back to our time base. We're gonna draw the 11 o'clock candle, which is right here. Put the orange line in there. 11 o'clock, okay. And the next one was 11:40. And we'll look at the 11:40 candle right there. Okay, and bear with me, this will all make sense in a little bit on why I am doing this. All right, now we're gonna zoom in to the part that we actually care about. So first we'll focus on our entry. And again, when you're trading, right, it's not, you don't just I'll zoom out a little bit. It's not just basically relying on indicators. You need to look at the price action, you need to look at what time it is during the day, and also news articles on who may be speaking that could affect the way it's doing. Just, you know, quick high level look on this one. You know, it's pretty dodgy looking at it, a lot of dip, and now you're looking for the right reversal. And you know, from our 50-foot view from earlier, we again looked at the most idealized trade, right? So on that one trade with the entry, you know, put it next to each other so it's easy to visualize what's going on. In a way, you could say this is a reversal trading, counter trend trading, but we looked at, you know, again, the potential of what would have been a great entry. So, all right. So based on this, what I would have been looking at is my indicators on the bottom. And again, the indicators are lagging indicators, so there's a bit of a delay. And first on this YM, I drew this this blue line here, so you can circle where your indicators are. So for example, for stochastic RSI, it's right there. That's where it is. So in the middle of the pack, around 48, heading into the overbought side. And then if you look at the MACD itself, you can barely see it, and let me zoom in so we can actually take a look at that. Oh, actually no, let me circle it first just because of the software I'm using. I'll circle that, and then I'm gonna zoom in on that indicator. You'll see that on that indicator, it's hard to see on the lines, but that's where the histograms are for. You can see on the histogram that it pretty much changed from a dark red to a lighter red, and it's about to go on green, so an actual crossover, which to me is a bullish sign. And of course, you know, we're talking about this candle, so you don't know what's happening on the next one just yet. And that is why it's important to, not important, but for me, this is why I both look at a time base and a tick base indicator. Because when I go to the right and I look at the tick base indicator, and I'm gonna circle the same one, so this is the same time frame, this is what I would have seen in the stochastic RSI, and that's what I would have seen in the MACD. You can see from here we were still on the oversold side, and we were actually still haven't crossed over yet. So going back to the full screen, just being realistic, right? Would I have entered on this? Let's use a yellow color. Would I have entered on this candle? Probably not. Again, we have the benefit of hindsight 2020 here. But based on what I'm seeing here, I would have actually waited until maybe the next candle to enter. So let me just draw that line where I would have entered. Not this next one here at 10:13 because it hasn't quite crossed over. I would have actually waited potentially here at 10:15. So I'll draw this entry that I would have made at 10:15, Let's make that thicker again. I'll make this even a lot more thicker to differentiate it. Actually, let's use a different color. I'm going away from my usual way of doing this, but okay, that's where I would have entered on the tick base. So that's at the 10:15 candle. So we'll draw that same line on the time base side on the left side. 10:15 candle. Pick that color we want there. Okay. And then now we'll analyze the indicators again, and this is why, to me, in reality, this is when I would have entered. Okay, so gonna zoom in on the time base side first on the indicator, and actually I'm gonna erase the previous ones. Let me see if this works. Aha, cool. All right, this app that I found is really helpful on doing these drawings. Okay, so on this second line, you can see based on this histogram right here that he had turned green. So the crossover did occur. So that's bullish to me. And then on the stochastic RSI, I like to go along when we are on the overbought side, which is above this green line. Not quite there, but the trend is definitely heading that way. So that would have given me confidence to enter based on the time base indicator. And now we'll go to the right side on the tick base indicator. And I'm gonna again erase the previous ideal entry. Again, hindsight 2020, right? So we wouldn't have entered there. So I'll erase this one too. So in reality, like what I said, I would have entered on this green line that I did here. And if we look on the crossover, again, it's still an aggressive entry. It hasn't quite, if you look at it, oops, wrong. Pardon me. And let's use the right one here. Okay, so if you look right here, when I entered, it would have been an aggressive entry because I am hoping for an actual crossover, but crossover didn't quite occur yet. But what would have given me confidence is this right here, where we would have been on the overbought side of that stochastic RSI. So that's when I like to go long. And the reason that I like to go along that way is from patterns like these. I've looked at multiple patterns over years, different times, EU, US, Asia hours. And these were the patterns that made sense to me, and this is why I made those rules for myself, that system for myself to make an entry. This is why from the beginning I said it doesn't matter what you use, right? Just use your usual indicators, and if you can prove to yourself, let's just say a probability of at least 80% or so, that this entry will be profitable for you based on previous trades, then that'll give you confidence to make that entry in the future. Again, I say it's a probability because it's not always 100%, because there is no such thing. So anyway, so with this entry, let's go back to the full screen. I would say that would have been our entry, and then just hypothetically, let's just look at what that entry would have been. I'll just draw a line here. Let's say 181. Let me zoom in on that. So let's just say we entered at 33,181. So that's on the time base side. And I always draw this horizontal line of my entry because Thinkorswim doesn't do it automatically. And now I'm doing my trading through Apex, where I'm using Tradeovate. However, all my analysis still are done in Thinkorswim. So I'll still do these drawings just to help me stay sane when I'm trading. So that's on the time base side. And then on tick base side, we'll also draw where 33,181 is. So 33,181 right there. Okay. So again, hindsight 2020 trading, right? With that entry that we made, let's look at the, you see this line. You can see that from 10:15 on this first candle to these next two candles, 6 minutes would have passed by, and then here 10:24, that would have been 9 minutes. So this first four candles right here, you can see that a portion of it, you're potentially underwater because it goes up and down. However, if you are able to hold, and this is why it's important to have that position sizing, you need to be able to have position size that you're comfortable with, where you can handle a drawdown. I mean, it would have been keep going up. The first problematic candle where you would have panicked maybe is this candle right here, because you can see that little wick that fell below your entry. And risk management, it's really up to you on how you want to do it. For me, I use a trailing stop on the bottom, so you'll follow it as it goes up. And if I have more confidence, I don't want my stop to be too tight, because things of this nature could happen. There's no quick rule on what's the right or wrong way of doing that, because it's, I hate to say this, but you'll just get it the more times you trade. It'll just make more sense, okay? And then from here, you can see this all above water on all of these, okay? So that's a beautiful, ideal trade if you were in on it, okay? So that trade that started at 10.15, you would have, the first trouble would have been this candle right here, this red candle. And the time for this candle was at, let's see, 10.49. So can you hold a trade from 10.15 to 10.49? I know I can sometimes. It all depends. I know it's really tough. Again, that's why position sizing is so important. And then with this one, there's a good chance that this little drawdown would have hit my trailing stop and exited. But let's just say you're just amazing and you hit it to that top candle up here. So let's see, let me bring this down a little bit. So on this candle, let's just say we exited, let's just use that yellow line right there. Let's say we exited right when oh wait, let me zoom down a little bit more. Let's say we exited on that yellow line, which is the close from the previous day, so that's when the market would have broke even for the day. Let's just say for whatever reason we exited at 33,326, and I will bring the calculator on here to calculate what that is. You know, again, these are all theoretical, right? But it's a good way to illustrate what is possible. So let's say you exited at 33,326. Let me bring that up right there. Okay. And then let's say, like what I mentioned earlier, you would have entered right here at 33,181. So it would have been a total of 145 points. Okay. So if you were trading just one contract of the YM, multiply that by 5. That trade right there in roughly 35 minutes would have gotten you $725. And that is why sometimes one E-mini is really just enough. And I'm guilty of this. Sometimes I trade up to 4-6 E-minis, and because of that, I think I lose my focus a little bit. I either panic, or I exit too quickly, or I don't know. It's something I had a handle of a couple years ago, but with me switching to Apex funding firm, it's something that I need to retrain my brain again on how to do this. So I think that would have been a great profit, right? Anyway, I'm gonna zoom out a bit on this one, because we were saying, all right, let's say in theory you handled these two drawdowns and for some reason it didn't hit your stop and it kept going up again, and let's say you would have exited on this next orange candle there, and we'll draw a line, and that would have been at 33,366. Bring back the calculator here, and let's just say, let's erase all of this. You exited at 33,366, and then you entered at 33,181. That would have been 185 points, so 10 more points. So that's just the way it is, right? Like, is it worth it to do all that drawdown up again just to hit 10 more points? Maybe not. Depends on the number of contracts you have, right? So multiply that by 5, that would have been $925. So anyway, that's me sharing how I look back on the day to see, if my signals that I look for would have worked, and with this one it would have definitely worked. If you ask me, did I take this trade at that time? No, I did not. I'm taking a little bit of a break because I've been on a bad streak this past week and a half or so. So this is my way of pretty much taking a step back and going through my basics, reaffirming myself and getting the confidence that, hey, it works. And that's how I would recommend it if you're a new trader, a veteran trader, and whatnot. Anyway, hope you enjoyed this series. I'm gonna try and do this every week. I'm not sure if it's always gonna be a Thursday. I'll just pick a random day, and then we'll just look at it again from a 50-foot view like we did earlier when we just looked at, let me just erase all of this. When we just looked at that one chart, right? We just looked at the tick-based chart for today, and again focus on just from the close from yesterday to today. And based off of this, we just looked at, ideally the best trade that would have happened there. I think on the next content, I'll focus on maybe how I would have handled trading this area right here during the Asia and the EU hours. But I'm also trying to transition away from trading the Globex just because I've had some bad luck with it recently. But the part of me that says it shouldn't matter when you trade, I still want to conquer it. But anyway, thank you for joining in. Hopefully that was informational and pretty helpful for you. Tell me something on the comment, like if this was helpful or any tricks that you do as well when you're looking back on your trade, or maybe, I don't know, if you use Thinkorswim, you can always share your chart to me, and based on that link, I think you can do it from, I don't recall how you do it. Let's see, give me a second. Right here. So if you go on the top here, there's a share button, and based on that share grid, when you click on that share grid, what would happen is, give me a sec, you will have this right here, and when you share it, you'll be able to get this link right up here. You can send that to me, and if it's on Thinkorswim, I'd be willing to look at your charts, and we'll look at the best trade, right? And then we can go through the same exercise with your own indicators. Anyway, thank you, and I will see you tomorrow on our usual Friday content. All right, y'all have a good one, and thank you for tuning in.